So our first conversation now to unpack the commodities market, but we'll start with an industry whose service cuts across every other industry, and that's telecoms. The drama continues on tariffs, to raise or not to raise. Let's bring in Dumebi Oluwole now, senior economist of FDC, join me right here in the studio. Great to have you,
Great to be here, laddie.
Yeah, so we got that breaking news that the Nigeria Communication Commission actually gave the nod for tariff increase for the sector, but that was debunked, later on. Yeah. So we're here now. It's been a long time coming. We've seen everyone talk about, most experts say it's time.
Yes.
I'm sure consumers are not feeling that same
way
vibe.
Yes, exactly.
At this point. But talk to me about,
yes, I mean, you've already started by actually talking about what is happening. So basically, there is conversations around tariff reviews or not to actually have the tariff reviews. And by tariff reviews, we mean an increase, right, in the data subscription.
It's not going lower.
Because no, it's not going lower. So call subscriptions, call rates, data subscription packages, looking at those costs actually increasing. And the reason why this is happening, because we do have the telecom stakeholders, that's the Association of Licensed Telcos Operators in Nigeria. We also have the MNOs, Mobile Network Operators of Nigeria, talking about the fact that they need to ensure that their costs are reflective, and that their prices are reflective of the costs that they're significantly incurring. And we do know what has led to that over the last course of the year. Diesel prices are higher, petrol prices are higher, infrastructure deficit is still impacting their ability to, ensure some level of increased productivity. So that's about what is happening, right? And setting the context, we do know that there was a review some 12 years ago in 2013. That was when the first review happened, and the NCC and stakeholders, had that conversation, and there was a wide band for increasing, for instance, call rates. There was a wide band for that, where the tariff was increased from what it was to about 60 naira to a kobo per minute for a phone call, and the band was actually wide to actually accommodate an increase in call rates for up to about 50 naira, right, per minute. And as of today, that is not exactly what is happening, in the sense that we do not have any MNO actually charging about 50 naira per minute. And we do know the reason why.
Wrong. 2013, the naira was quite stable.
Of course.
And strong.
Of course.
Inflation
was not this high.
Right.
Yes, exactly. So that's part of what is happening, forcing the MNOs and and Altons actually have this conversation and bringing it back to the table. So in this case, we do know that competition is one of the drivers as to why we're not seeing any MNO charging up to 50 naira per minute for a phone call, right? But again, we also know that we have seen a lot of service downtime over the last couple of months. With when you make a phone call, you realize that my network isn't going. Your data services are not as good.
First time, most of the time.
Exactly. So we're seeing a lot of that.
The person will say, "I can hear you, but you can't hear me."
Exactly. So these are some of the issues. Even paying for doing cross-border transfers, we're having lots of issues. Even banks as well, bank networks, which are also connected to some of these services, are also heavily impacted, right? So that's one of the reasons why we're having. So we've set the context. We do know what is happening now. What is the implication of all of this, right? And we're going to assess this in two ways. If the tariff is actually increased, what we do know is that the prices of this data subscription and call rates are also going to increase. It means that consumers will pay more. And there is a compounding effect on inflation with that, because in the consumer basket, data is also part of it. And people do earmark resources, they earmark their income, a portion of their income, to actually pay for this service, alongside food, transportation costs, which we also know is also higher. So what this means is that consumer disposable income will also decline, right? Because people are now paying more for the services that they are getting. It also means that there will be a compounding impact on inflation rate in Nigeria, which is already at 35%, approximately 35%. And but again, when we look at it from the lens of productivity, what it also means is that subsequently we should expect to see an increase in. We should expect to see better service, right, from this network provider. We should expect that. It means that when you make a phone call, you should not have to say, "Oh, hello, I can't hear you," things like that. We should also expect to see the trickle-down effect of better services on other sectors of the economy that are heavily linked to these network providers. So from banking services to the digital payments ecosystem to aviation, right? So we do know that we should be able to see better services from all these other linked sectors to telcos.
But I guess there's tariff increase and there's tariff increase.
Exactly. So that's where we're going to in terms of like how this should now be implemented. So, but the other part of the implication where I was talking about is if it is not implemented, right? We do know that these conversations, this policy ambiguity, this back and forth will continue happening. And what that does for investors, that there's some level of decline in investor confidence towards the telco sector, which is extremely important right now when we're looking at technology implications, we're looking at all of that. And if all of this continues, it's not exactly a positive light for investors, which we do need to come into the sector and also come into Nigeria generally, because investors don't look at the economy in isolation. They do believe that if this is happening in one sector, and we've seen this in the oil and gas sector, we've seen the downstream oil and gas, we do expect that it will happen to other sectors, and we will be forced to keep approaching investment in the economy with a wait-and-see lens, right, which is not exactly what we need right now. And then again, now looking at the way forward, right? Number one, the implementation of this. If we decide to go ahead with the tariffs, the expectation is that we do not implement it by just ripping the Band-Aid off. It's extremely important. We've seen what has happened with the reforms in 2024, in 2023, and it will be a fallacy if we do go back that same route. So the expectation is that with the NCC's stakeholder conversations, using data to actually, decide on how best to on what the tariffs should actually be, on what the new ban should be, and the 3 months notice that they do expect to be
because these are consumers that are dealing with Band A. If you're looking at electricity, they're dealing with PMS prices.
Exactly.
So what are we looking at here? 100% increase?
So we do not know that right now. The expectation is that all of that will be communicated with the public, right? And it has to be communicated to the public because if it's not communicated, people don't know what to expect, and we'll just begin to see a lot of panic around what is going on in the economy. And we do not want social unrest, right? Because when you do too much, there's only so much people can actually take. So again, the important thing is on how this is implemented. That staggered approach should be the case, and ensuring that it's appropriately communicated to the general public on what is going to be done and how it is going to be done. Whether if it's going to be done in phases, we should know about that. So the implementation, communication, extremely key. Policy ambiguity as well is one thing that I do expect that policymakers in this regard completely start taking care of and ensuring that they no longer happen. And the reason is because, again, like I mentioned, the implication of that on investor confidence. We can't keep airing our dirty laundry outside, right? Let's have these conversations and make sure that even if there's going to be back and forth, right, which is normal. The expectation is that we do this by ensuring that there is clarity on what needs to be done and what body is saying what, right? Let's have those conversations and let's make sure that they're cohesive. There should be harmony in the entire sector.
I'm talking about the entire sector.
Yes.
We know, or we've heard, there's speculations that the satellite internet service provider, that's Starlink, they might have to go ahead to...
Exactly. So I do think that that was something I didn't mention in terms of what exactly is happening and context. So because we do know that Starlink is going to increase their subscription rates, I think from January 27th next year, and they most likely might have to go ahead from the NCC. We do think that there is the possibility that the MNOs and Alton is also speaking up because we're seeing that happen, right? Remember, Starlink is satellite related. They don't necessarily have an infrastructure on ground. So the costs that MNOs and...
So why are they increasing?
I mean, we all know what is happening in Nigeria. It's very possible that there's some level of infrastructure involved for them that is causing them to increase their data subscription rates. But regardless, what this means is that if the NCC might be approving that for Starlink, there should be conversations for MNOs that are experiencing a lot more on ground here. So from how much their taxes are increasing to their cost of operations, right? So their prices need to reflect that. So, and my stance is this: if we're going to increase these tariffs, it's okay if we do them, to be very honest, because we do want to ensure that productivity is the lens at which we're looking at the economy in the long run or in the medium term. And if productivity is involved, we do know the linkage effects, like I mentioned before. So if we're going to do them, let's just do them properly. So that's where
right, because at the end of the day, we have to consider, the consumers.
Of course.
Also, we're trying to get more people into, using these services. Yes. We don't want to kick them out.
Exactly. And I think I just want to mention that just from looking at this, you see that they have lost a lot cumulatively over the last couple of years. And remember that telecoms right now is one of the major drivers of GDP growth in Nigeria. Even looking at the latest GDP numbers, we do see that they contribute a lot more to GDP, telecoms and the financial services sector. And imagine a linkage sector like financial services, which is also dependent on telecoms.
Right.
If telecoms is losing, it means that financial services might also lose.
So
and
it's
it means
a situation where if they go down,
a lot of other sectors will also go down, and so there's a huge implication on GDP. And that's why I mentioned that productivity is the lens that we should be looking at the economy through, because that will determine the kind of approach we take to ensuring that companies are actually producing as much and their services are better, and then we also use that lens to determine the policies that we create for them.
All right, let's pivot now. Talking about going down, we know commodity prices did rise before Christmas. What are we seeing now?
I mean, we're still seeing that mixed trend. Prices are not exactly the sweetest.
Right.
But consumers are still spending a lot more. We're still seeing price of rice still remaining high, ridiculously at 110,000 naira per 50 kg bag. But we also know that retailers are also resizing these bags. So we have 25 kg, we have the 5 kg now. We're also seeing 1 kg so that people are able to...
Next thing, sachets.
So people are able to actually, buy these commodities. We're also seeing that the tomato prices are high, pepper is actually down, and remember, the seasonality is also impacting some of these commodity seasonality. So we're looking at planting season for some commodities, which is this Q4. We do expect that going into by March next year, where we're seeing like harvest season, we might see an increase in some of these commodities that should probably bring down prices.
So there should be a cooling in January.
Yeah, we should see them cooling, but then that cooling will also be because of slow demand. Right. Remember, people are not consuming as much, and there's a lot of there's a little bit of consumer resistance happening here. So with that in play, coinciding with the possible increase of some of these commodities due to the harvest season, right, we do expect that prices might come down, because remember, we're coming from a period where there was still some flooding in some of the key producing states late this year, and that would still keep having an impact on commodity prices. I think the key thing here to really watch out for would be government interventions towards food production in Nigeria, ensuring that some of these recurrent issues like flooding are significantly addressed, insecurity as well. I know this is almost sounding like what we've been hearing like since God knows when, but the reason why we're talking about this a lot more is because we are deciding we've embarked on reforms, and there's only a lot more that the people can take, right? And we need to do more to ensure that food inflation specifically, which is the biggest driver of inflation in Nigeria today, is significantly declined. And increasing interest rates won't solve that for us. It's ensuring that the infrastructure, ensuring that we're reducing post-harvest losses, logistics costs are significantly reduced, and that's talking about now the train connectivity that the government has been talking about, ensuring that these things are actually working to make sure that food prices go down. And if food prices begin to go down, we'll definitely see.
And interestingly, there are drums of optimism out there for 2025.
Yes,
I just hope we've learned
our lessons
from 2024.
And make sure they don't repeat themselves.
Into the new year. Thank you so much, Dumebi. Always great having your perspective.
Thank you so much for having me.
All righty, there. We'll take a break now. When we come back, we'll get a review for the fixed income market. That's in a moment. Stay with us.